Mike Tedeschi, Wealth Management Advisor with Perspective Wealth Planning, with this week's market breakdown video. As always, if you like this content, please subscribe to our channel so you can see this on a weekly basis. Also, if you'd like to reach out to me directly and talk about anything related to the markets at the end of this video, there'll be a link to my email address as well as a phone number where you can pick up the phone and give me a call. Let's jump right into it here today. We're going to talk about the four major U.S. indexes. We're going to take a look at breadth readings, and then we're going to take a look at the U.S. dollar and how commercial hedgers are currently positioned and what that could mean for the U.S. markets as well as the gold market over the next couple of months. So let's jump right into it here. First and foremost, as we talked about last week, we were not able to make a new high on the S&P 500, but we were still holding above that key 3,400 level. If you really look at the way this market is structured right now, we're actually in between that 3,600 new all-time high and 3,200 here over the last month or so, and the middle of that zone is where we are currently sitting at right now. So you would expect if we break below that 3,400 to head back towards that 3,200, and if we hold here, you expect to kind of get that test back to the upside. Overall, we're still basically since July trapped inside this range, and heading into U.S. elections again, I think that we're probably going to stay inside that range until we have some clarity from the U.S. elections. When we take a look at the rest of the indexes, Nasdaq very similar, right? We can see this range right in here, and we are sitting right there in the middle of it at the moment, holding on to that 11,500 level. That's the key that we're going to be watching here over the next couple of days. We take a look in at the Dow, still no new all-time high from earlier this year, so weaker again. Resistance right at that 29,000 level, support back down here on that 26,500 level, and the middle zone right here is actually back down here. So the Dow is holding up a little bit better. A move back down here would test the middle of that zone, and if we were to break back down, expect to move lower. And again, if it were to hold there, expect that move back to the upside. And the other, of course, weaker of the indexes is the Russell. We still have not taken out those highs from earlier this year, and we actually have not had new highs for multiple years. So even earlier this year, that was not a new high out of the mid and small caps. 1650 was the failure spot. You've heard me talk about it over and over again. Those 50s have been the important kind of levels on the Russell here for a while, so we're going to actually look for a move if it can't hold above that 1600 back towards 1500. Middle of that zone is 1550, which is also that important high from June. So major indexes look very similar. When we take a look at the emerging markets as well, they are about to push back into those highs from earlier this year, right? We had a little bit of a pullback last week, held that 11,000 level, and have pushed back up. This is a big zone. You get back up above this, really your next resistance point comes in all the way back up in here. Is a lot of open space, and we have not been back there since 2018. So this would be a pretty big deal, and this is something I think we should continue to watch very closely for some value opportunities in the emerging markets if this can continue to push. Let's take a look in at the U.S. dollar itself. All right, when we take a look in at the U.S. dollar, we've talked about this a lot. We had that bounce back over the last couple of weeks and failed right at that key, what used to be support, now acting as resistance, and has turned back down. It's sitting kind of right down there at the bottom of that zone. Any more push to the downside, you would expect to see that 91 level get tested. If it can hold here and stabilize, again, we're looking back up in this zone. So the U.S. dollar has been trending lower here for some time. That has not changed. In fact, it still looks to me incredibly weak. And we're going to talk about the actual U.S. dollar hedger numbers here in a second. Let's go through the rest of the commodities real quick. We take a look in at crude. 4150 being that key level. We tried to push up above that one day this week. We pushed up to about 4175 before it turned back down once again. So still that 4150 zone, which comes in from that gap all the way back earlier this year, is still acted as kind of that resistance and that key level. So we're still watching oil in the same light as well. We take a look in at gold. Gold continues to trade sideways to down here over the last couple of months. This still could be essentially a bull flag in that uptrend. We really want to see it get back up over that like 1940 zone for that next kind of push. And when we back this up and look at it on a long time frame, things still look good. We're holding over those major long-term breakout levels. Again, we had quite a move here in the last year, so taking some time to trade sideways is certainly normal in the course of things. So we're going to continue to pay attention there. If you lose that 1825 down to 1775 zone, that's where I think that would change the story in the gold market. So first thing we want to take a look at is our breadth readings. We talked about the Nasdaq McClellan Summation Index getting back over that 0 zone, so back in positive territory and turn back up. And if we look right kind of where it failed here on this chart, is that major kind of resistance zone, an area where it has struggled in the past. It started to turn back down as we've continued to see kind of the markets drift lower here over the last week or so. So what happens here is important. Are you going to get a little movement like we had last year where we pulled back a little bit, kind of based for a bit and then took back off? Or is this going to be one of those kind of reverses and we're going to head and turn back lower? I think what happens here in terms of our breadth reading is very important, and so we're going to continue to take a look at it. Now, we're going to take a look at commercial hedgers and what they're doing inside the U.S. dollar. We're going to look at the time where they essentially go net short, and we are going to take a look at this because that is what we are currently at the moment. And the first time that we see the U.S. dollar hedgers go net short after it was in positive territory for 12 weeks or more, data set going back to 1986. The data points for the U.S. dollar are abysmal moving forward. This is one of the uglier looking data sets that we've taken a look at. It's positive 1 week later, and then it is not on average positive for the next year. 3 months out, 2 months out, it's only positive 9% of the time. 3 months out, 27% of the time. So this really shows some heavy pressure in on the U.S. dollar historically when we see this setup. When we take a look at that same data set, but we look at it from the eyes of gold, it's very good for gold historically, and that makes sense. Again, commodities are priced in U.S. dollars, so a lower U.S. dollar typically is that tailwind for commodities. And we can see gold being positive out 82% of the time. 2 months later, a year later, is positive almost 91% of the time. And these setups here happen a lot during that really strong bull market run up for gold. Again, we've kind of started that process again. So it'll be very interesting to see how this ultimately plays out. But this is a very positive data set for gold. Last but not least, let's look at what this does to the S&P 500. And this is, again, a very negative data set. Where 1 month out we're positive 55% of the time. 1 year we're positive 55% of the time. But 2 weeks out, 2 months out, 3 months out, 6 months out, we're negative a high percentage of the time, a third or worse, with risk to reward really skewed in the bear's favor at this moment. So this is one of the uglier data sets that we've taken a look at for a while. It is cause for concern. So I think really when we pay attention and when we're looking at moving forward, what happens in the U.S. dollar really is going to be important for the overall market and for gold as well. So we're going to continue to pay very close attention to this. Hope you guys have yourselves a fantastic week. As I said in the beginning of the video, if you wanted to reach out to me directly, you can reach me at mtedeschi at Perspective Wealth Planning, or you can give me a call at 814-580-9881. Love to discuss anything related to the markets with you guys. As always, I hope you have yourself a fantastic week. We will see you next week. Take care.